Welcome back, everyone, to the Risk Intel podcast, powered by SRA Watchtower, where we share risk intelligence with experts from across the banking industry. I'm your host, Ed Vincent, CEO at SRA Watchtower. Welcome to the Risk Intel podcast. I am thrilled to have back on the program with me today, Phil Goldfeder, CEO of the American Fintech Council. Phil, great to have you with us today. Thanks for joining.
Thank you so much, Ed. Look, I'm nervous to say this, but you're one of my favorite members in the entire organization, and we appreciate what you bring to the table in terms of your expertise, but also energy. So thank you for having me.
Thank you, Phil. I appreciate that, and likewise, right? I think that we get after this with the same amount of energy together, and that's why we enjoy our partnership and our membership with the organization. Let's jump into the content here. Earlier this year, right, the Fed, the FDIC, and the OCC issued a joint RFI on bank-fintech arrangements, right, involving banking products and services distributed to consumers and businesses, right? Recently, here in late October, the American Fintech Council issued a comment letter, a very thoughtful and thorough one, and we'll get into that, the substance of that in a second, in a response to that RFI, and it really articulated three themes. The first was the importance of making enhancements to the regulatory framework for the bank-fintech partnerships. The second was improved education for the examination staff. And the third was around modernization of the regulatory systems and operations. I'd like to get into those areas, but perhaps before we jump headfirst in, maybe we start by you reminding our audience of the mission of the American Fintech Council and why it's important when an RFI like this gets issued, why it's important for the AFC to submit a comment letter.
Thank you. I very much appreciate the opportunity to talk specifically about this, because I think what you just said is right. The RFI speaks to exactly why organizations like the American Fintech Council exist and why our membership has grown the way it has in the last couple of years. The American Fintech Council is probably different than most other trade associations in two distinct ways. Number one, we're a standards-based organization, which plays to exactly to your question, in that our entire goal and mission is to create the standards for emerging financial technologies, for innovating banks offering embedded finance, to put a positive, responsible message out related to the industry long before regulators think about how they should be treating those organizations. And so I often say the industry should define itself before others try to define it. And I think for emerging financial technology companies, for innovative banks, it's critically important. So number one, we're a standards-based organization. And number two, we're one of the only organizations that counts as members banks, fintech companies, reg tech companies, and we put everybody under the same umbrella so that it's not one industry talking against the other industry. Oftentimes you see this happening, right? Like, oh, it's not me, it's them. Oh, it's not me, it's them.
Right.
When you put everybody under the same umbrella, you actually get to create a solid foundation that is thoughtful, that is collaborative, that is inclusive, and that enables us to really put forward unique ideas that we think will have a real ability to stick and create a pragmatic future of finance. And so, the American Fintech Council is not our goal is to move the needle on financial services policy and regulation, and why we were so excited when the agencies put out the RFI. And I'll say, before we dig into the real meat of it, the beauty of this RFI is not just in the RFI. I think the beauty of it is something that often gets overlooked. It's a joint RFI. Now, Ed, I don't have to tell you, right? The challenges that our membership has, because sometimes the OCC interprets something one way, the FDIC interprets it another way, the Fed has a whole different thought about how to interpret.
And then you've got the states in there as well, right, Phil?
Oh,
So
don't get me started.
Right?
Yeah, like don't get me started. And I can tell you that the beauty of this is that word that is often overlooked, joint, right? Similar to the way we think about our organization, government and regulatory agencies just think about it the same way. How do they work together to craft clear guidelines. Clarity is key for innovative banks and fintech companies trying to offer innovative products. So it was a joint RFI. We were so excited that they put it out, and we were eager to respond. Credit, and I would be remiss if I didn't say credit to my amazing team, led by Ian Maloney, who literally sort of got all of our members talking, right? And Ed, I know that you participated in a number of our working group calls. I think it took more than a dozen phone calls and meetings to sort of get get the culmination of our member thoughts and ideas onto this letter, and we're excited about what we presented.
Well, it reflects, Phil, exactly your second theme there, that you have this unique collection of viewpoints. And so those working groups, right, brought those viewpoints together. And so I am hopeful, right, that the recipients, the readers of this, right, those joint agencies will see that this does reflect, right, a conglomeration of ideas from across those different constituents, which is a pretty unique viewpoint, as you say. The other concept you introduced of standards, right, we'll come to that towards the end, because that clearly plays a big part in the end of the comment letter around recommendations. So let's get into the substance of these items. So one of the first themes that you introduced is that on the regulatory framework, you note that all relationships are not the same, right? You draw the distinction between fintech consumer and fintech supplier partnerships, or direct and indirect bank fintech partnerships. So why should, when you're an agency or you're a regulator, why should these distinctions be important as the regulators consider guidance and regulation?
Again, the regulatory agencies need to move in the same form and fashion and at the same speed as the organizations that they are regulating. And I think about what fintech has really created. And again, there's no better expert than you. What's interesting is the beauty of fintech, it's not one size fits all, right? I think traditional finance tended to be one size fits all, and you had to kind of bucket everybody. And if you didn't fit this exact mold, banks would ignore you, right? You just sort of were not counted. Fintechs have broken that mold, right? Our ability to utilize innovation, AI, if I dare go in that direction, right, enables us to look at every single consumer individually and ensure that they have the optionality that best serves their family and their needs. Regulators need to be thinking about it the same way. And too often, regulators, and I'm not saying this in a bad way, I think, for 200 years, the system has worked fairly well, right? You've seen adjustments over the years, and you've seen some challenges over the years. I think in the 1950s, you saw it with the introduction of credit cards. In the 90s, with the introduction of the internet, I think you're seeing a whole new revolution now, but not in a bad way. You're seeing an organic revolution of financial services. Regulators need to look at their ecosystem exactly the same. And unfortunately, and I say this as you know, I spent a career in government long before I entered the banking and the fintech space. Regulators need to look at the ecosystem the exact same way and think about the evolution of the regulatory structures to match the evolution of the entities that they're trying to regulate. And so that's kind of the balance we tried to put into our letter. But as you know, we've been doing this for years, right? The American Fintech Council was founded almost 5 years ago with that exact intent. And so we're a little saddened it took this long to get such an RFI and for our ability to really share. We've worked so hard with the Office of Innovation at the OCC, with the Novel Activity Supervisory Program staff at the Fed. Unfortunately, the FDIC not as cooperative. But again, our goal is to continue those conversations, to have meaningful dialogue, to really change the narrative.
I'm going to jump ahead, Phil, because you introduced a theme there that is the third point in the three themes I mentioned earlier. So I'm gonna come back maybe to the piece in the middle, and some of the specifics of the meat of the best practices. But I want to pick up on the last thing you mentioned there about the fact that the regulators and the regulatory structure needs to evolve to mirror the evolution that is occurring with its constituents. And right, you talk in the comment letter about the importance of the modernization of the supervisory tools and technologies, right, that these regulators are utilizing, which seems to really kind of drive home that point that, guess what? These fintechs are innovating and evolving at a really fast pace. you have to play at the same speed or at least similar speed, because otherwise you're going to kind of risk being left behind and becoming irrelevant or really kind of obsolete because the market is moving very quickly.
And think about, it's funny, think about what that actually means, right? If the regulator is behind, and when you're behind, you tend to stifle the person in front of you, right? To try and think about who's actually being hurt, right? It's the end consumer that is now going to potentially lose that product or service that the fintech company was responsibly offering. And so it's not a matter of reining in, companies that are inherently doing something wrong. It's quite the opposite. These are companies that are providing a consumer service, right? Consumers are demanding more and more of their financial services on their cell phones. They want to do their banking at 3 a.m. They want to utilize different products like buy now, pay later, or earned wage access, right? And consumers want it responsibly, right? And we don't have to say that. I think consumers want that responsible optionality. And that's what AFC member fintech companies and innovative banks are offering. The challenge we have with the mismatch from the regulatory side is it's sometimes easier to sort of put your hands up and say, okay, everybody stop. We don't know exactly what you're doing and whether we think it's right. And so if the regulator is doing that, what happens is that the consumer then loses potentially the program or the parameters of the program that keeps it safe. And so I say this often, in the name of consumer protection or in the name of regulatory control, which I think is important. And then, by the way, as I said, AFC is a standards-based organization. So we wholeheartedly and fundamentally believe in that. But in the name of consumer protection, if we're not careful, you're going to actually hurt that end user. And here's the challenge. Bad actors will always exist. And I'm not going to tell you who they are. I mean, we all know who they are.
Right.
They're not going anywhere, right? They ignore the regulators. They ignore the fines. They find new crafty ways to step in. And in the absence of reasonable, responsible products, consumers will just continue to go back to those as they have for many, many years. And so responsible fintech companies are really changing the nature of the product offering, and regulators need to encourage that, right? Find ways to support that. And I think you've seen a lot of progress, and I'm hopeful that this RFI and the responses and the collective sort of ingestion of those responses will lead to, going back to where we started, a really enhanced framework for how regulators look at the entire industry as a whole.
I'm gonna call out, Phil, a few of those best practices that are identified, because the depth, the thoughtfulness that exists in this comment letter. I made a comment to you, maybe a little bit tongue in cheek, but maybe not, that I would love it if the regulators would take this letter and simply change the header on the first page and have this become the guidance, because it has that level of detail to others, right? So credit to Ian and team for pulling that out from the American Fintech Council members, and they've laid out some incredibly valuable best practices, right? They start by talking about the importance of risk management processes and practices during the onboarding phase, taking a consumer first approach to determining if or how to partner, right? You talk about, right, the downstream impact. It's not the fintech, right? It's if you stifle them, it's the consumer that ultimately pays. So taking that consumer first approach, conducting robust suitability assessments, which are holistic qualitative and quantitative assessments, and then contingency planning. And then, we continue on with talking about best practices surrounding ongoing maintenance and termination, and the letter even dives into AI, as you talked about, in data management and disclosure. So, in many cases, this represents tremendous detail. So let me ask the fundamental question here, which is, right, why do the American Fintech Council members, share these best practices? Is this their special sauce, or right? What's their reason for sharing this?
Yeah, it's interesting. Ian and I both had the ability to meet with the FDIC probably about 4 or 5 weeks ago at this point. And we do that periodically with all the regulatory agencies. And we talked about a lot of the themes in the letter we talked about in that very meeting, right? As a sort of a preamble to what we were thinking about. And the FDIC continued to tell us, we look forward to seeing it. We look forward to seeing it. And so we really took that as a mandate from the agency that, we represent, and I think they recognize that we represent sort of this wide industry and sort of unique membership, and really wanted to see it. And so we just wanted to take the most thoughtful approach and make sure that we included our entire membership, right? Not just, it would be easy just to say, oh, we'll just talk to our banks, or we'll just talk to our fintech companies, or we'll just talk to our reg tech companies, right? We think everybody, even when they agree, bring a unique sense of that agreement, right? Like, or bring a unique reasoning behind why they're saying, which lent, I think, flavor that we ultimately made its way into the letter. And I think, and we hope that the FDIC, the OCC, the Fed will appreciate that. But just because you're in private industry and you're offering a product that you think is fantastic, doesn't mean that you get to operate in a vacuum and do what you think is right. I mean, I talk about our membership in a way in which you have a responsibility to yourself and your own shareholders and your own company and your own employees, but you also have a responsibility to the wider industry and to the entire financial services ecosystem to really spend time talking about why what you're doing is good and is going to benefit the consumer, right? Information is always the answer to sort of ignorance, and always the pathway forward. And we believe, and I say this a lot, and anybody who's ever heard me talk on a podcast or at a conference, every single company, I don't care if you're a 1-person startup or if you're a 1,000-person company or 5,000, you have a responsibility to talk about what you're doing, how you're doing it, how you're benefiting consumers, and how you're thinking about the larger ecosystem. Again, to define yourself, to sort of make sure that there is a clear understanding before someone else defines you. And to me, it's why AFC exists, but more importantly, it's not just about AFC, it's about our membership who comes to us and saying, how do we do this, right? How do we get our message out there? Do regulators really want to hear from us? Like, do they really want to talk to me about what we're doing? That's important in every single industry. It's 10 times more important in financial services because we're talking about the bottom line for American families, and you want to make sure you're getting it right. And so our members, by virtue of the fact that they've joined an organization like ours, is a signal to policymakers, members of Congress, attorneys general, the FDIC, the OCC, and the Fed that we're eager to engage. And the idea, you're most worried about those who don't want to engage, right? There's always like, those who don't want to talk about their business model or talk about their program or their offerings makes you wonder why don't they want to talk about it. And so we believe that our members, even when they're competing, by the way, and Ed, you see this all the time.
Yep.
We have members that in their business practices, they're competing. When it came time for writing this letter, they all came together. We had, on one of the first committee calls specifically related to this letter, we had over 40 companies represented on the call. And so that's not easy to do. I don't have to tell anybody. Getting 40 companies to join a call and sort of have a very pragmatic and positive conversation as the framework for what we ultimately delivered to the agencies just today.
So there's real value, right, for the agencies to hear this, to receive it, right? You've got members who are eager to engage and taking that responsibility of talking about what you're doing and how it benefits consumers and why you're doing it. You say that it resonates with me as well, right? I think about, right, why do we exist as an organization, and that we believe it's really important to help those community banks, the Main Street banks, have strong risk management programs in place because it improves their safety and soundness, which helps the industry. And for them to continue to exist, that helps that Main Street business, right? That wants the loan from Sally or John down the street, right? So it is important, I think, for all of us to look in the mirror, as you said, and think about that. One of the things that I think we have to do, and that this letter, I think, takes a step towards doing, is educating the staff, at the agencies, right? You said that's one of the 3 themes in there around, reforms to the examination process and educating the staff. What can our listeners do to help in this regard, and what can the community banks and the fintechs do to help in this education journey?
So firstly, I think that's a great question. We talked about enhancing the framework. We talked about kind of the regulatory modernization, which I think is critical to meet the organizations that they're regulating. The education has to happen, and interestingly, it has to happen on our side, right? At the
Yeah.
banks, at the fintech companies, right? We have to do a good job. I mean, you go back 2 or 3 or 4 years ago, the thoughts about compliance were fundamentally different for fintech companies than they were for banks, right? They're almost talking different languages. And one of the biggest challenges, I think, as an industry that we have started to overcome, start to bridge that gap, right? Financial services compliance should not look different, regardless of where you sit in the
Right.
ecosystem. It's got to look the same, right? And I think that's helpful, I think, for us as an industry, but it's equally as helpful for the agencies. When I first entered the fintech realm, I started asking a lot of questions, right? I'm a recovering politician. I spent time on the political side, and I joined sort of the world of fintech with a very inquisitive sort of like as a learner, and I started calling agencies, and I started calling regulatory agencies, and I started calling regulators. And Ed, I would tell other people in the ecosystem, it's like, oh, why don't you call the commissioner of this agency, or why don't you call the head of that agency? And people were shocked, and they were like, wait, you could do that? You could just call up a regulator? And it's sort of this fundamental, again, the way government looks at industry, sometimes the way industry looks at government, right? Like,
Yes.
oh, you're just allowed to call the FDIC and ask questions. And it's just, yes, they have an entire department dedicated. The CFPB is a great one. They literally have an entire department dedicated to private industry engagement, right? And
Mm.
so again, bridging that gap, I thought within the fintech ecosystem was critical. And that's what, I spent a lot of the beginning part of my time in this industry was really about unifying the industry, building out an American Fintech Council that really puts everybody under one umbrella. But now, sort of to flip that around, is to sort of work with the agencies to ensure is that there is that education. And it's nice. It's always nice when the head of the fintech program within an agency, I always loved the OCC was one of the best. They were one of the first organizations to have an office of innovation within the regulatory agency. And I used to meet with them all the time. I mean, I would say probably 4 or 5 times a year, we would go in, talk about what's going on in the industry. Um, the challenge for us was, as an organization, as one of our recommendations in our letter was, it can't just live within that office of innovation, right? It only serves a purpose for the financial services ecosystem if it actually sort of starts to distill out to the entire organization, meaning it
Right.
goes from the head of the organization, so the control of the currency, the chairman of the FDIC, the head of the Fed, but that goes all the way down to the analyst or the examiner, in Wisconsin or Kansas or wherever they are, right? The thinking and the evolution and the change needs to be sort of broad in its reach. And so again, it really goes both ways, right? It's what's so unique is that everybody thinks they're so different. We're really all the same. When you have a company that has scaled and now has thousands of employees, right? You have to do the same thing. If the CEO has a mandate or a strategy, it's only as good as the analyst's ability to execute on it. So
Yep.
it doesn't matter how much the head of an agency, and again, I don't want to select anybody, but you could
Yep.
take the Fed, the OCC, the FDIC can all get up and talking about creating access to financial services. The Treasury recently put out a report on how we're going to
Right.
create a more inclusive economy, right? These
Yep.
are great talking points. You know what? What's really exciting is that we actually have companies who are innovative companies who are responsibly already providing those services. And instead of encouraging it and creating more ways to get those companies to do even more, oftentimes we find the regulatory structure is stifling it. And so that was really the theme of the letter. But again, we all love to have those grand talking points. It's always sort of the proof is in the pudding, where we want those offices of innovations to engage. We want the heads of agencies to talk about banking the unbanked and creating access. It's the responsible fintech companies that are actually doing it right now. And so
Yeah.
they both have responsibility to each other.
Yes, and I think that that our listeners and American Fintech Council members and beyond, should look at every interaction which they have with their regulator as an opportunity to educate. I had lunch yesterday with the head of innovation at a $4 billion or so bank in my neck of the woods, and he was talking about the fact that, right, when he joined he kind of landed in his post a year and a half or so ago, and the regulators came in and they were anxious, they were concerned. And so he focused on education during that first cycle. They launched a program to deliver small loans to local community businesses, $10,000, not big numbers, kind of SBA loans, right? Nice long terms, but it allows kind of small entrepreneurs to get out of the gate. And that's all powered though by fintech, underneath it, right? Whether it is as part of the KYC using some AI tools to do that, or to kind of source those opportunities. So it's fintech. It's done in a really responsible way. It impacts the local community, and it was kind of crawl, walk, run, and that allowed this director of innovation to then sit down with the regulator and say, look, this is what responsible innovation looks like. So I think that we each have a responsibility with each of those moments that we interact with the regulator to help bring them along the journey. I know you have a big event coming up, right, in a few weeks, where you're going to have a lot of these constituents together, and that certainly is, I would imagine, one of the objectives of the American Fintech Council Summit is education.
Yeah, November 19th. You can get information at fintechcouncil.org. And that's the beauty of it. I think too often times people want to create the division, especially today. I mean, I don't have to tell anybody we're in election season. And so, sort of you're seeing a lot of polarized opinion creating division. We're trying to break through that. It's what I did throughout my entire political career and what I'm trying to do now in the fintech ecosystem. I want regulators to criticize my companies. I absolutely do, right? Criticism is not inherently bad. And I want to criticize regulators for sometimes the way they're doing things. And that's not bad. And we don't have to be enemies, and we don't
Right.
have to, end our relationship, right? Criticism is good. Competition breeds excellence, right? Like I want people to point out our flaws so we can create a stronger, better system. You shouldn't have to think about election cycles or who's leading the agency to determine financial services policy and regulation. That should be something that is built on solid foundation and best practice and evolves, right? Like that's the way to do it. It shouldn't matter who is at the head of the agency as long as we continue to make moves forward. And so, yeah, we're excited on November 19th. All of our members are going to be there. I'm excited that you're going to be there. I'm pretty sure you're speaking and leading one of our panels. And here's the best part, and I'm going to warn you in advance, Ed, regulators will be sitting in the audience, right? They want to hear what you're saying. Every single regulatory agency in financial services will be present at the American Fintech Council Policy Summit. Some of them agree with us. Some of them disagree with us. We're also going to have consumer groups there, right? Some of them who agree with us, some of them who disagree with us. And here's the best part. And I think people ask me all the time, like, what's your proudest moment? And I'll spare everybody the details. My proudest moment in the last 2 years since I've been here at the American Fintech Council is when one of our member companies, a large company, a big brand name that everybody's heard of, actually changed their policies based on some of the conversations we were having in our working groups. And the CEO called me and he goes, I want you to know, my team brought this to my attention that you've been talking about this issue, and we realized we could do a better job. And he said we changed one of our policies to enable us to be more, more in line. And so I tell that story because to me, everybody thinks that inherently, trade associations are meant to fight and push into government and to get government to change to meet their needs. Sometimes it's quite the opposite. Governments and regulatory agencies have the unique ability to get private companies to change what they're doing. Not just because they got in trouble, right? Just because when you have these conversations, reasonable people will come to reasonable solutions. And that's really what we've built here at the American Fintech Council. And so on November 19th, we have literally every one of our members, every one of the federal regulatory agencies, even some state regulatory agencies are going to be in attendance. And it's a unique opportunity to see the people you want to see in a very meaningful way and have what I hope will be a good dialogue. And to me, the best summit has meaningful takeaways, right? And that's kind of why we drafted the letter that we did. I think it did two things. It accomplished a holistic approach from not just any one piece of the industry, but the entire industry. And number two, I think it gives, like you said earlier, gives a good framework for agencies to implement and move the needle.
Phil, you have covered a huge amount of ground. I really appreciate it. Thank you for taking us on this journey here. I hope that our listeners really take away those themes that you mentioned up front, right? And you summarized it there well at the end, that this is this is a collection of different viewpoints that have come together, right? And that's a theme that is important to recognize. That's why this is such a valuable piece of content that has been created here, right? It is trying to accomplish what you said at the outset, right? Defining standards long before there's regulatory enforcement. And so this is a great piece of content. I would encourage all of our listeners to jump on, and we'll put the link to the letter up. It is public; people can access it and read it. It's a great blueprint for anyone who is exploring or contemplating, right, operating in this space. And I certainly look forward to the conversation there on the 19th, and encourage folks to consider joining that as well. I think we've got a really great opportunity here to tackle these issues head on, and I appreciate the American Fintech Council's leadership on this front.
Look, and we appreciate you even more. I mean, we are a member-driven organization, and our goal is to really make sure that we're getting the best policies and the best standards, not just the ones that this one agrees with or that one agrees with, right? And you and your team have been a big part of that. And so thank you to you, and excited to see what comes next. I mean, look, Ed, you're on the front lines changing the world, and financial services is really just sort of the core of everybody's life. And so what you're doing is really making an impact. And so we appreciate your participation.
Great. Thanks, Phil. Thanks for the time. We appreciate it. We'll see you in a few weeks. Take care.
Looking forward.